The time has come to start the meeting to present the consolidated financial results for the third quarter of fiscal year 2017 for Hitachi Limited. I would like to first of all introduce the speakers to you. Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Tomomi Kato, Deputy General Manager, Financial Strategy Division. Yasuo Hirano, Executive General Manager, Corporate Brand and Communications Division. I would like to ask Mr. Nishiyama for the presentation. Please refer to the PowerPoint presentation material that has been distributed to you. Please refer to 1-3, which is the statement of profit and loss. The left-hand side is October to December, third quarter, and on the right-hand side, the April to December accumulated result is presented. Now, for the third quarter, from October to December, revenues was 2,297.5 billion yen, increase of 6% year-over-year. Adjusted operating income was 171.3 billion, 22% increase. At the very bottom, net income attributable to Hitachi stockholders, 97.9 billion yen, increase of 20.2 billion yen, or increase by 26%. And on an accumulated basis, revenues was 6,674 billion yen, or 2% in increase year-over-year. Last fiscal year, portfolio reorganization impact is included. Foreign exchange impact is also included. In the absence of these, revenue increased by 5%. Next, adjusted operating income, 474.5 billion yen, or increased by 101.4 billion yen year-over-year. EBIT was 472.8 billion yen. At the very bottom, net income, 258.5 billion yen, increased by 67.3 billion yen, or increased by 35%. In terms of operating income as well as EBIT and net income, for third quarter as well as for the 3 quarters, we have recorded highest ever levels. Significant contribution was made in the area of information telecommunication systems as well as social infrastructure, industrial system, and construction machinery. These 3 business segments contributed significantly. Details will be presented later. 1-4. Revenues and adjusted operating income waterfall chart is presented. Looking at the left-hand side, revenues, the impact of reorganization was negative at 306 billion yen. Foreign exchange impact was positive, 160 billion yen. Business scale expansion impact was positive 300.7 billion, or 5% increase on an organic basis. Right-hand side, adjusted operating income. Impact of reorganization was minus 29 billion yen. Foreign exchange impact was positive 25 billion yen. Profitability improvement, etc. Positive improvement of 105.4 billion yen was achieved. M&A is also included in business scale improvement. And in the sales business improvement, out of the 300.7 billion, M&A was 138 billion. Pure organic growth was 162.7 billion yen. And profitability improvement, 105 billion. M&A contribution is 3 billion. Others is organic, pure improvement. 1-5. Revenues by market will be presented. Outside Japan, ratio was 52%. At the very right, year-over-year comparison is made. Japan 97%, outside Japan 108%. Foreign exchange impact and portfolio reorganization impact excluded will mean Japan is 100 and 109 for outside Japan. Overall, 105. We saw significant growth in China as well as Asia. In China, construction machinery as well as automotive systems grew. For ASEAN, India, and other areas, Hitachi High Technologies, construction machinery grew and increased. For North America, construction machinery as well as Cell Air acquisition has had an impact, and Hitachi Industrial Equipment has grown. For Europe, Hitachi Koki reorganization, Hitachi Capital reorganization have had an impact. About Hitachi Chemicals, as well as the railway business, as well as construction machinery, grew in Europe. For other areas, Hitachi M&A construction machinery grew. 1-6 is the summary of the balance sheet as well as cash flow. Now, looking at the balance sheet first, at the very top, total assets was 10,196.1 billion, or increased by 532.2 billion yen from the previous year. In the fourth quarter, the inventories increase are related to revenues. And with respect to cash conversion cycles, 68.6 days was achieved, which is a significant increase over the previous year from by 3.6 days decrease. And stockholders' equity ratio was 31.6%, and D ratio 0.28 times, both improved. Below, we have the summary of the statement of cash flows. Cash flows from operating activities was 473.2 billion because of cash flow improvement, as well as profit improvement, as well as cash conversion cycle improvement. The business transfer process have fallen off. Cell Air acquisition expenditures increased. Therefore, investment increased by 314.2 billion yen in terms of cash flow from investing activities. But free cash flows was 158.9 billion yen.
Next page, let me talk about the business segments for third quarter and the third quarter year to date, mainly focusing on adjusted operating income. First, information telecommunication systems. The system integration business in Japan expanded, and the currency impact was also positive. Although ATM sales decreased, we were able to increase our revenue. Adjusted operating income was up by 26.6 billion yen, a big improvement from the previous year. One positive factor was the profitability improvement in system integration business in Japan and the effect of structural reform in IT platform and products. So those two were the positive contributing factors. EBIT was a bigger improvement than operating income because the previous year we had the reorganization-related costs the previous year, which declined this year. Next, social infrastructure and industrial systems. We had some increase, a shrink of low profitable business in industrial distribution field, which was negative, but this was covered by railway system business for UK and industrial product business due to the acquisition of Cell Air, so revenue was up by 2%. In addition to the revenue improvement, profitability improvement in business in industrial distribution field and power and industry energy business and industrial products business This was positive and covered the increase in procurement cost and decrease in sales price in elevator and escalator business in China. So the operating income improved by 29.3 billion yen. Next, 1-8, electronic systems and equipment. Hitachi Koki deconsolidation was a negative impact, so the revenue was 93%. But with the sales increase in semiconductor production equipment, we had 3.2 billion increase in operating income. Next, we had the overseas sales increase mainly in China in construction machinery and acquisition of Bradkin and HE parts. So revenue increased significantly. With the increase in revenues, operating income increased by 55.1 billion yen. Next slide, 1-9, please. High functional materials and components. Electronics and automotive related products increased. And acquisition of FIAM Energy Technology by Hitachi Chemical were positive, so revenue was up by 15%. Adjusted operating income was up by 5.2 billion yen. Next is automotive systems. Sales increased in China, but sales decreased in North America. And Clarion's sales decrease of car information systems of Clarion was another negative factor. So revenue was up by 2%. Clarion's deterioration and the sales decrease in North America were negative factors. So adjusted operating income was down by 1.9 billion yen. Next, smart life and eco-friendly systems. We had change of accounting to net basis revenue for part of procured products in overseas market, and sales decreased in home appliances in Japan, and therefore revenue was down by 5%. On the other hand, we had positive effect of cost reduction and structural reform, so adjusted operating income was up by 3.3 billion yen. Others segment, impact of the reorganization of Hitachi Transport System, and financial service had impact of reorganization of Hitachi Capital. Next page, please. 1-11. We have listed some topics. At the top, you can see the progress of Lumada business in terms of revenues. The top line shows revenues of Lumada business. 677 billion yen. Lumada core business and Lumada SI business combined. So we are seeing an increase. We are having collaboration, more case examples with clients, and studying more utilization of IoT. So deals are increasing. Some recent examples are, first, started providing Hitachi AI technology, digitalizing know-how of skilled experts in creating production plan using AI. So Hitachi AI technology planning optimizing service started in Japan. We are conducting demonstration with Nippon Steel and Sumitomo Metal. And we also started collaborative creation using AI with SBI Sumishin NetBank, aiming at significant improvement in examination accuracy for personal loan and loans for SMEs. And as you see in the handout release, we established a joint venture with FANUC and Preferred Networks. We are aiming to develop intelligent edge system for the field of industrial and social infrastructure. Next, in business portfolio transformation, in healthcare business, we decided on two acquisitions. One is Mitsubishi Electric's particle therapy system business, and Vigistar, a U.S. company which offers solutions such as image diagnosis, data analysis. And HKE Holdings completed tender offer of Hitachi Kokusai Electric on December 8th. And we are transferring stocks of Alaxala Networks, a network devices company, to Japan Industrial Partners in March this year. Lastly, progress of Horizon Project. In December last year, GDA, Generic Design Assessment Process of UK Advanced Boiling Water Reactor, completed in December. Next slide, please. 2-1. Outlook for fiscal year 2017. Basically, the forecast we announced on October 26 remains unchanged. And the currency assumption is exchange rate of 100 yen to the US dollar and 120 yen to the euro. This remains unchanged. But we made some revisions in the segment. Information telecommunication systems and construction machinery are revised upward, and social infrastructure, industrial systems, and high functional material components and automotive systems are revised downward. But all in all, total has remained unchanged. Revenues 9,300 billion, operating income 660 billion, and net income attributable to Hitachi Limited stockholders 300 billion remains unchanged. Next, slides 2-2 and 2-3. On the far right, you can see the previous forecast comparison. Information telecommunication systems plus 9 billion, social infrastructure and industrial systems minus 5 billion. Construction machinery plus 20 billion yen, high functional materials and components minus 15 billion yen, automotive systems minus 9 billion yen. That's all for my explanation. Thank you.
では質疑応答に移らさせて
We would now like to open the floor for questions. Please wait for the microphone to be brought to you and state your name and affiliation before asking your question. The floor is now open. Thank you for the explanation. A question. I have two questions. The first question is regarding the third quarter from October to December, regarding the actuals by segment. How does your actual compare against your internal plan? Please elaborate. Now, compared to internal plan, I would like to talk about third quarter as well as three accumulated quarters. In terms of revenues, increased by 40 billion against plan. Operating income increased by 15 billion. And by the segments, for information telecommunication systems, 12 billion plus against plan. And social infrastructure industrial system, lower by 2 billion in terms of operating income. And construction and machinery increased by 15 billion over plan. And high functional materials and components minus 6 billion. Automotive system minus 4 billion. That is a result against the internal plan. Question. No, what about the fourth quarter? In terms of corporate items and eliminations, it's 40 billion. Is there still a buffer included? Or did you subject this to a review? Answer. Regarding at the time point of October, operating income of 30 billion as well as non-operating purpose 30 billion, total of 60 billion risk have been identified. We have not changed this for operating income 30 billion and non-operating purpose income 30 billion. So the 60 billion risk buffer will be maintained as is. A question. A second question is regarding the downward revision of the social infrastructure industrial systems. Please talk about the market situation. and the reason why there was a downward revision, as well as your outlook for fiscal year 2018. In the social infrastructure industrial systems, there was deterioration. In buildings only, elevator business declined, especially the Chinese business in elevators. And there are several factors behind this. For example, the steel materials price increase. This is leading to cost increase for us. The volume has not declined, but price decline has had an impact. In the mid-range, products have been promoted and we have reduced cost. But the price decline was more than the improvement. There was price decline, especially toward the north as well as west in China. Environmental regulations have suspended the building construction work. This is a one-off factor, but having an impact on our Chinese business. Profitability has deteriorated as a result. And that is the reason why we had to revise downward the outlook by 5 billion yen per year. Furthermore, for other segments, in information telecommunication systems, the front business remains strong. We believe this will continue. Flash storage, for the 3 quarters, it remained firm, especially for the high-end flash storage was strong with high profitability. The high-end products have remained strong. Now, 3D NAND has been expedited in terms of flash storage. And by front-loading this, revenues are likely to remain strong. And that is the reason why we have made the revision for information telecommunication systems. For construction machinery, this has already been announced through the Hitachi construction machinery results. The business environment is recovering. We believe that this environment will continue going forward, and it is reflected in our outlook. For high functional materials and components, and 15 billion downward revision. Metal is 12 billion, chemical 3 billion. These numbers have already been announced by these companies. For automotive systems, 9 billion downward revision was made. This is for the Clarion business deterioration, as well as in North America, automotive systems. Productivity improvement has been promoted. However, cost reduction is being delayed, reflected in this number. So, inclusive of Clarion, we have made a downward revision of 9 billion yen. I hope that will suffice. Question. In terms of social infrastructure industrial systems, other than the building related, please comment. Answer. Other than buildings, the business remains strong according to the plan, following the plan.
Question. I have 3 questions. First, FANUC and Preferred Networks, you are conducting a joint venture. It looks very promising, the combination of the 3 companies. What do you plan to do? I just read the release, so what do you think you can do in this joint venture? Answer. The detailed business plan will be developed going forward in the joint venture. The 3 companies have their strengths. First, FANUC has machine tool, robots, know-how, And then preferred networks has the AI technology, and Hitachi has the OT and IT technology. So combining the three strengths, intelligent edge system can be developed. So the business plan, first of all, development and demonstration, proof of concept will be the starting point. So the business plan will be developed very soon. Question, the automation, factory automation or the overall optimization using AI will be the goal? Answer, yes, automobile and social manufacturing is another area. So the social infrastructure, industrial infrastructure can utilize this intelligent edge very broadly. So that's what we plan to develop. So that is what we anticipate in the starting point. Question, what is the headcount? Answer, we have to define that going forward. The basic agreement is 3 points. One is the business feasibility validation, and then platform development, and then the application, expanding the application field. And second is intelligent edge systems, POC, to validate the business rationality and feasibility. And after the validation, intelligent edge system and the platform technology a specification will be developed, as well as the actual development. So this is the basic agreement. Detailed plan will be deliberated going forward. Question. My second question is on the same slide, page 14. You talked about the UK nuclear deal. Since the beginning of the year, I've seen the news. So if there are any progress from Hitachi IR Day? Answer, we crossed 1 point. GDA, Generic Design Assessment, was acquired, which means we can go to the next phase, which is site license. We will acquire the site license by the end of fiscal year 18. So the overall timeline is on schedule. The support from UK government is being discussed, still under negotiation. So for Japanese and UK government, we are asking for assistance. So the detailed conditions will be fleshed out with the UK government. That's where we are now. Question. My last question is on non-operating basis. Minus 90 billion is your forecast. In the fourth quarter, if you deduct, it will be minus 80 billion if I do the calculation. So it seems that there is a big buffer. So structural reform cost is one, but Hitachi Kokusai, the business transfer, is another factor. So when you forecast fiscal year 18, the non-operating one-off for fiscal year 17 and a fourth quarter one-off events, could you share with us that? Answer. Large item is structural reform cost. Reorganization cost is big. So it's difficult to define the one-off events. Structural reform, the deteriorating business, will be subject to the reorganization. So this will not go down to zero. It will not completely end. So the structural reform will continue. That said, large items were completed by the end of fiscal year 16. In this time, storage-related, global storage, or the consolidation of the bases in Japan and the overseas bases, and Hitachi Vantara, a storage server sales company, is now being transformed to digital solutions. So we are shifting resource to digital solutions. So that was the big factor in fiscal year 17. So total 80 billion factors in some risk. Risks are the reorganization and the impairment. So we did the same as last time, 30 billion. Question, Hitachi Kokusai and Alaxala sales is also being planned. So this gain from sales, how much will be posted in fiscal year 17, gain on sales? Answer, Hitachi Kokusai in fiscal year 17, we cannot make it in time, so no, it's not factored in this fiscal year. Question, what about Alaxala? Answer, Alaxala, I cannot mention numbers, but it is not large.
よろしいでしょうか。その他、では。
Next question, please. Question. I have two questions. First of all, regarding Lumada Core, you have provided the progress for the 3 quarters. In achieving the projection for the fiscal year, I would like you to provide further elaboration on the progress made. Answer, in terms of progress ratio, 950 billion is the forecast, and the was 677 billion. So that's 71% for the 3 quarters. The internal plan was basis is 65%. Therefore, on a full year basis, it is likely that we will be exceeding the 950 billion forecast. A question regarding the intelligent edge system. I have 2 questions relating to this topic. Currently, the FANUC feed system is being promoted. How will the new initiative differ to that? Second question is regarding the coexistence with the Lumada technologies. You're using AI in Lumada, but now with the preferred networks, how are you going to allocate between the two? Regarding the joint venture of the 3 parties, we will have high speed and real-time cyclical control will be promoted. FANUC has a field system, and we will continue this development going forward. But a field system, as well as new companies' intelligent edge system can collaborate together. By so doing, a more sophisticated edge system can be achieved. Now, in terms of how we are going to allocate the business between Lumada and the new joint venture, the intelligent edge system for the new joint venture company can be captured into the Lumada business in the future. That is what we are intending for the future.
ございますでしょうか。
We do not see any questions, so we would like to close the briefing for today. Thank you very much for your attendance. Thank you.